Willie, mate, oh my God, we have a lot to talk about. How are you?
Good. Pretty good. Been interesting 48 hours, isn't it?
It's been a while, 48 hours. I can imagine. I can imagine you were fine with it, whilst a lot of people are panicking and worrying. And for an experienced trader, it was a good time. Good time to trade.
Yeah, well, I was coming back from retreat and taking it slow, so I unwound a lot of my positions, and yeah, I was pretty much sitting in cash and not trading, so um, it kind of pulled me back in. But yeah, it's been just really interesting to watch this last 48 hours unfold. Um, I mean, gosh. The market was already pretty soft. We had in April, if you can recall, the miners tripped over the power cord in China, and we had the
Hmm.
hash rate drop, and all the derivatives unwound, and we got a lot of price drop, and we were just kind of recovering from that. Price kind of got up to 55,000 from recent bottoms, and then Elon tweeted that Tesla would not accept Bitcoin as they previously had announced as payment for their Tesla cars, but furthermore citing the fossil fuel usage, which it was met with sudden sell-off. Um, Significant sell-off, and it wasn't sell-off from the derivatives because they had all just unwound. The market had just been purged of traders, and we were pretty much looking good. But we had tidal waves of coins start to form and be sent into the exchanges. And whales were selling down, and from the looks of the age of those coins, they didn't carry much didn't carry much, sorry, age with them. So very young coins, um, and I think they were the coins that were collected on the way up between the 24 to the 30,000 mark, 40,000 mark back in January. It just seemed like that also from the profit those coins were carrying as they were being dumped out. So we saw this price sort of drop, first very immediately from short-term speculators. It kind of stabilized around the low 50s, and it teetered there as more and more coins were being sent into the exchanges. And so put together the latest bearish action we had in April, a very tentative recovery, and then this second wave of hard sell down. The markets didn't really withstand that, and we lost 50,000. Then found a next level at 45,000. And as that was happening, traders, not spot investors, but traders were thinking they would buy the dip. So the number of contracts on these futures exchanges started climbing and climbing and climbing and climbing, and we reached an all-time high in terms of Bitcoin value at that kind of by then we were down to like teetering around the 38,000 mark, and it was the amount of selling was enough to push it over, and we dropped below 38,000, which apparently was the liquidation level for these long positions. So
Is that what drove us down to 30 then?
yeah, we had a minor capitulation where we dipped down and recovered quickly, and I think a lot of traders thought that was it, and then the selling was too strong, and we broke below the liquidation levels, the risk limits, where in a long position, there's going to be a certain price at which you're either going to get bankrupted or your risk levels are going to kick in and you're going to sell out of that long position. So we just saw cascades of these futures contracts, long positions, unwind. That's just saying they're going to sell down. And when they sell, of course, the price drops a bit, and then that hits the next person down at the lower level, and then you just this cascade and a runaway of selling as these long positions get bankrupted, and that took us down to 30,000, even 29 on some exchanges within minutes, absolute minutes, and all the exchanges started to freeze up. The UIs on them started to freeze up. Binance, Coinbase, Kraken, all of them. FTX held pretty strong. They were pretty much okay. But people who were wanting to buy the dip couldn't even buy the dip. They couldn't even log in. Even BlockFi, where people were trying to log in, trying to send in more collateral on their Bitcoin-based loans, were shut out as well momentarily over that mayhem. And so that's what happened. And then, of course, once we purged that all that selling, price immediately bounced back up into the higher 30s almost within a few minutes or so. So yeah, it was fireworks, absolute mayhem.
Yeah, I mean, I've been through 2 bull markets. The first one doesn't really count, but the last one, and witnessed 30%, maybe 40% drops. Panicked myself, didn't know what to do. Kind of weirdly enough with this one, even with it going like we're almost like 51% down from the higher, I was still all right with it. I was kind of okay. I mean, there's no doubt in my mind because I get paid by some of my sponsors in Bitcoin, and so they're the only coins I sometimes worry about because I need to use them to operate the business at times. But
Right.
but personal stacks, I was like, meh, I'm fine. It is what it is. My DMs and emails were wrecked for 48 hours. I can't get through the DMs quicker than they're coming in, and it's some of them are actually really quite sad. I've got people claiming they've lost everything. They don't know what to do. They don't know how to tell their wife. They're broke. Really sad stories. That's the sad side of it. But I think also that's sometimes I'm not sure what to do. You want to put an arm around them and say, "I'm really, sorry, this has happened to you." But you also, at another time, you want to say, "Look, you're taking on too much risk. No Bitcoin held in cold storage was liquidated. If you're putting everything into leverage positions, you're taking way too much risk."
Yeah, I mean, you can only lose if you're on leverage, and you're on the wrong side of that. And so, it's a double-edged sword. It's all great when things are going up, but with these markets now, we've got so much leverage in the system with the likes of initially BitMEX and now Binance Futures, CME, OKX, all these exchanges doing immense volume. The volume is heavily weighted on the derivative sides. It's very you'll notice that volatility, and you'll notice the shapes change, and you can almost take a guess at how much leverage is in the system by seeing how choppy the price becomes. And yeah, when you get this kind of liquidity failure where there's not enough buys and we have hit a liquidation point. This is the second time we've had this in barely over a year. The last one was COVID. The thing just plummeted. And before that was the 2018 bottom near the tail end of 2018. That thing plummeted like we'd never seen before up to that point, like a sheer downward wall, cliff. And, that was the first BitMEX liquidation. That was the first major derivative markets unwinding. And so if you're going to play leverage, you have to know what you're doing. And if you're going to do it as a new person participating, then you really need to position very small until you learn the game.
But I reckon
Further
there
you
must was going to say, Willie, there must have been some pretty smart, experienced traders who still got hit pretty hard with this.
Yeah, yeah. I know a few, and they were liquidated. Also, they were also buying the dip, and also remember this thing happened right in the morning in US time. So people were just waking up to the sell down overnight. And, I know some were trying to send more collateral into the exchanges to lower their liquidation levels. And some people got liquidated before that happened. I know some very sophisticated traders that were, just like the market took them unprepared for that kind of event. No one thought we would have a COVID style crash right in the middle of a bull market. So yeah, it's
Do you think
been.
it's do you think it's unhealthy, the amount of leverage we have in the system then? And is
Yeah,
there
I
anything
do.
we can even do about it?
Yeah, I don't know. It's like because we've got very much, you know, we've got a lot of unregulated derivative exchanges. I don't know if that's the issue, but it's so easy for anyone to sign up, click, and enjoy 100x plus leverage. What Binance was saying that 60% of traders use more than 20x leverage. So it's really fun in games if you see. It's like a casino, right? And it is like I do think it's unhealthy for the long term picture of Bitcoin, the growth of that, in terms of just the sheer amount of volatility that's added into the market and the fear and the amount of people that are losing their shirts. There's this other side of the story where these derivative markets are creating huge opportunities for traditional folk who want high yields, and you can kind of do a market neutral strategy where if you're not interested in Bitcoin, you just want cash, but you want to generate a 20, 30, even 80% return per year, which is unheard of when, cash free rate on US dollars is like, what, 2% or something in normal markets. It's so attractive. They come in here and they have to buy Bitcoin to participate to get that access. So you kind of get this other effect where traditional markets are deploying money into Bitcoin to get access to that yield that's created by the demand for these derivative markets. So it's double edged. I think in terms of the long story of Bitcoin, where it's like the currency for the people. It's not so good.
No, and that's
It's
what's bothering me, Willie. And in some ways, like I've been trolling Elon Musk. Not that I thought he would ever reply. I mean, he replied to my thread, but I've been trolling him. I doubt he sees it. But the point being is that I've been out in El Salvador looking at the Bitcoin project out there, and I've been now in Guatemala looking at the Bitcoin project here, and the things that people are trying to do with Bitcoin to help people. And when we're at the whim of a single billionaire and people are panicking about that, I've realized like a lot of people are in this for the gains. And don't get me wrong, I enjoy the gains too. Of course I do. But at the same time, if we're trying to build the hardest, best form of money in the world, being at the whim of single people or fearing pissing off Elon Musk, I don't think is good. I mean, I even tweeted this morning, please sell your coins. I think it'd be better for the long term strength of Bitcoin now if he wasn't here, because it just seems to be causing too much of a problem. So many people leveraged up, so many people worrying about their gains. It's like, well, don't piss off the billionaire. It's like, well, hold on. We're trying to create hard money here.
Though, I'm kind of glad this happened. It's heartbreaking for some people who lost a lot of money. But in the long term picture, first off, you've got a billionaire that's gone a little bit AWOL and tweeting weird research that are actually lies if you were to do the deep research on Bitcoin, its energy use, and how the long term effects of that. That's dropping the market. Is one thing is that the more that happens, the less the market will respond to it. The other thing that happened with this one in particular was the people who were most scared, and the reason why the markets dropped so much this time was these guys that sold their coins, they were new participants. They have only held their coins a very short amount of time. Secondly, they were very high net worth individuals. So they're very rich Bitcoiners coming in from really rich people, full stop, coming into Bitcoin, holding whale sized quantities of Bitcoin, which creates a new concentration of wealth. Now, what happened was they were the ones that sold. So we've had the value that's being held by whales drop, and the people that have been buying it has been small retail. The growth of coins being held by below 1 Bitcoin in holdings has been climbing unperturbed, and actually the user count, as Elon was tweeting, and as price was dropping, people were getting in, maybe from the publicity, but we got an uptick of users arriving the first time as seen on the network. And it kept climbing as the price was wicking downwards. So the publicity got out there. Maybe there were people on the sidelines thinking, well, it's run away, it's getting too expensive. And now it's coming back. And they bought the fear, and they bought the dip, and this was retail.
Good. That's good then. Well, I definitely hope he sells his whole stack and that gets distributed to retail. And yeah, I would happily take dollar losses in my portfolio size to have a wider distribution of coins and less centralized influence over the price. And I'm a hypocrite. When Elon first came in, I was jumping up and down. Oh, this is great. Tesla on board, Elon's on board. This is great. But actually, I now see it as a bit of a negative. I mean, it's great when we have someone like Saylor who's just a fucking great Bitcoiner, cares about it, keeps investing, puts out great information, does his research. When someone like Elon comes in and just disseminates bullshit, pumps Doge, and it's just really fucking unhelpful to the hard work other people are doing. So if you're right, then that's cool.
You kind of have a responsibility when you got 55 million followers to be not
not a dick.
Yeah, just just it's almost like drunk tweeting, and like, but that one looked very much like, yes, we want to ensure our chances here at Tesla to continue to get our carbon credit rebates to the tune of more than $1 billion per year. So we got to present the right picture. And so, yeah, it was the pumping the Dogecoin thing was a bit sickening. Whilst it was sheer lies, wasn't it? Like,
well, dude, like the next day, so he puts out the energy FUD, and then the next day he tweets out, what was it? Speaking to Dogecoin devs. It's
exactly.
just like fuck off, just fuck off,
It's
mate.
the ghosts
It's just
in his room.
there's
Or in
so
his head. It's the Neuralink
like
too.
it was. Well, it's like Jack Malice said in his tweet thread. He said, "You're like the drunk girl at the party, and we're the ones cleaning up your puke."
Yeah.
And I thought that was a really well thought out point, because there are so many people that have been working on this for the last 12 years, like some of the smartest people in the world, working to build this amazing decentralized network, solving really hard problems. And then he's just coming in, just spouting bullshit. The Dogecoin community, look, if you want to trade Dogecoin, fair enough, but let's not ever attempt to compare it to Bitcoin and say it's a competitor. It's just fucking frustrating. I'm really pissed at it, because I know how hard these people work all over the world. People working so hard to try and deliver this, and they're just having to counter his bullshit and waste time. I mean, I've had texts from people saying, "Should I buy Doge?" And it's like, of course you fucking shouldn't. But you don't say that. You have to get on the phone. You have to explain to them what decentralization is, what Doge is, what Bitcoin is, and you're just wasting time that could be spent doing other things. So it really pisses me off.
Yeah, that's right. And that's just that's one of the things that I was reminded by, based on the energy FUD tweet. Like fossil fuel use, we need to do something more energy efficient. There's very little understanding of how important it is to get a very fair and wide distribution of coins in the most decentralized way possible. There's no way that I've seen. Correct me if anyone out there has figured out how to distribute coins widely and fairly without a trusted third party that gets to hand those coins out. Like the path that Bitcoin's design has chosen is that you've got to swap energy to get the coin. And it's been distributing over 12 years. Now, sure, there's a shortcut you can do. You can do a very energy efficient network, um, but that network means that you're doing proof of stake. You've got a team of developers who now own all the coins, and you've got to figure out how to spread that evenly to what will be 1 billion people the next 4 years is the current rate for Bitcoin. It'll take Bitcoin 16 years to distribute widely to 1 billion people. And how are you going to do this when you've got one project with a team there, essentially holding the coin? So the and then if you were to think, I think Michael Saylor put out a very good piece on like the 7 layers
Yeah, it
of
was
how
excellent.
that was excellent on how this whole system has layers and layers of decentralization in it, and that's all to um, protect the holders of Bitcoin from one ruler that dictates what's going to change about this monetary asset. Um, like, yeah, I'll leave it there. But
Mm.
yeah, I think there's still a lot of
Okay.
education to be done. I note that the ones that bought into the FUD were most likely these whales that they saw a like, what was it? They saw maybe a 2x to 5x of easy profit, which is very, very unheard of in traditional markets without leverage. And I think that was enough to scare them out and to take the profit. We're now in this situation where there's no more profit on the table transacting between the sellers and the buyers. So anyone selling right now is, well, not anyone, but the market in general is selling at a loss. So that's going to be really hard to sustain, given all the key market macro indicators are bullish. We've got the uptick of new users. They don't care. They're coming on in. They like buying Bitcoin cheap. The valuation right now, I'm reading around the 55,000 mark based on what kind of volume going through the network, people buying this. Like, yeah, what else? Like the MVT ratio, which is a nice macro market indicator, says this is a buy zone. There's an immense amount of activity in the network between investors compared to the valuation. We haven't seen any kind of mania. Like, we dumped down from a level which was highly organic, no speculative premium. 2017 top, for example, we were, I think, 3.8% higher than the organic valuation. So, this is not a mania phase and then the end of the bear market. This is just a middle of the bull market derivatives unwind. So we've got a lot of cheap coins sitting here in the market. I think it'll take a bit of time to recover, just from the sheer amount of coins that we dumped out. It'll take time to reaccumulate. But yeah, I think ultimately, if you look at the network health, this is a good thing.
So it's not the end of the bull market.
No, not at all. It might put let me have a look. It's too early to say, but like a lot of the model, well, the model I use for the market top is based on the price trajectory, and it's slowed the rise to the top for that model. So I have to have a look. Let's have a look. Yeah, it's too early to tell. Let's see. We'll have to. It's predicated on what happens in the next quarters of the bull market, but it's going above 100,000. 200's looking confident. It would need to go up very quickly for us to reach above 300. So
So are you, because last time we spoke, I think you said we were looking perhaps at 300 at the top. Are
yeah,
you
we're on trajectory
recalibrated down from there?
3 to 400. Right now, I'm looking at just ballparking that. All right,
Yep.
2 to 400. It's too. It's this. I need to see how this price gets absorbed. I want to see what happens in the weeks to come. But it's definitely slowed. Yeah.
So has this affected you in terms of your trading significantly then? Like, because energy wise, I can tell your energy is different from normal, Willie. So is this, y- you're saying that, but are you saying it with caution?
No, I'm no, I'm just zened out a bit. I had a retreat 2 weeks ago, a 9-day retreat. So I'm less on you know, like bull market adrenaline right now because I've been on retreat and doing a lot more meditation. um, but that's all. That's personal. It's nothing to do with the market. I'm not trading right now. I've got a baby due, in a few weeks. I'm kind of trying to shed the adrenaline of the market so that I can be a bit more present for family life to come. So
So you're
that's
just
all.
all zen.
Yeah.
So in terms of like reading the market right now, do you think this is just going to put us in a kind of longer ranging accumulation phase as people try and figure out what's happening?
Yeah, I think we're going to have some sort of shape on the price chart like COVID put. We'll recover. We've got to go sideways. The coins that we dumped out need to be reaccumulated by longer term holders. And then, yeah, it'll take a bit of time. Don't think it's going to happen next week. It might take a month or two, um, which might be, what, like, isn't it? Now we've got a lot more traditional guys in the markets. Summers in the Northern Hemisphere tends to be a bit soft amongst traditional traders, summer holidays. So maybe that'll take a bit of time till that's finished. But it's really too early for me to get a picture of how quickly this thing's recovering. The It is recovering. Like we saw immense peaks in flows out of the exchanges as we were going below the into the 40,000 range, and a lot of coins are coming off. So very bullish on the exchange flows again, and we had a reversal in what I call the Rick Astley indicator. We had like as Elon tweeted, we saw strong movements of coins from strong hands to weak hands, meaning those previously strong hands became weak hands. So again, like those guys that bought probably below 40,000 in the bucket loads, held their coins until now. That's my guess. But we had a very much this movement going from strong hands to weak hands, and that's just peaked. And it's starting to swing back. The momentum's starting to swing back to coins moving back to strong hands. The last time I saw a peak of this magnitude um, was the bottom of the COVID crash. It forms a peak. It was a very exaggerated movement of strong hands getting freaked out and selling, and that's subsiding now. And the last time that happened at that scale was the bottom of the COVID crash. The time before, which was also of that scale, was the bottom of the dead cat bounce in 2018. Like really early in 2018, after the $20,000 top, everyone sold down. We crashed. What was that price? We crashed from 20,000 to effectively $7,000, and then we bounced back up. So that was in those are the two prior times I saw the Rick Astley indicator show that kind of movement between strong, weak hands and then revert. So that gives me another feel for where this recovery is. It looks like it's a lot of indicators saying we're recovering. The coins, the SOPR indicator showing the coins that are what kind of profit the coins are carrying, moving between investors, is everyone that's been transacting now. The sellers they're moving their coins out, selling for a loss, and that doesn't happen very much in a bull market, and no indicator right now saying we're in a bear market. So I think, I think this. I'm pretty sure with all these on-chain metrics that the coins are moving back into strong hodl, like smarter retail than high net worth new to crypto whales.
Well, I like that idea. I like that idea of these new whales capitulating themselves, panicking, because I guess a lot of them are coming in because they've seen the news, seen the hype, they've bought in, they've panicked, and they've redistributed those to new retail strong hands. I think that itself is bullish. That wouldn't have crossed my mind. So that's a really, really good thing to hear. And I guess these people, that redistribution of coins hopefully would lead to less volatility long term. But with this derivative stuff, it's not happening.
Yeah.
But it still feels like a good scenario.
You can understand, right? You kind of like, okay,
Yeah, I
I'm
get it.
managing maybe my 10 mil, 20 mil, and like BlackRock CEO, whatever, chief investment officer says, yes, we believe Bitcoin is a valid investment. One after the other, very respected fund managers say, yes, Bitcoin is in. Oh, I don't have a Bitcoins. Let's buy $1 million shot of it and get an allocation for my portfolio. Not knowing exactly what you're buying necessarily, maybe asking a few friends, and then there's Bloomberg spouting off a whole lot of things, including the energy use, the car, it's too volatile, it's what's the other one? Like, it's the holdings are too concentrated, constant FUD by certain media outlets. And then suddenly Elon Musk tweets, yeah, the fossil fuel's an issue. We're not going to accept it until it's improved. And he's validating this bullshit FUD, which has been debunked for years within Bitcoin if you've done the research. But you kind of understand that, like, well, I've just had like a 2 to 4 or 5x on this ride, and suddenly the so-called smartest person in the world with one of the richest and smartest engineering minds in the world is validating some of this FUD. I guess I could see that, I could see that happening.
And it wouldn't be a bull market without hearing about China banning Bitcoin again.
Oh yeah, that was very timely, wasn't it? I kind of wonder if that was pushed out by the Chinese orchestrating a long, what is it, short squeeze, long squeeze? Long squeeze to dump the price.
Interesting times, Willy. Interesting times. Okay, so there's a couple of things you've mentioned. I want to give people some kind of reminders. You talked about the NVT. Can you just remind people what that is?
Okay, so NVT stands for network value to transaction ratio. Chris Beniski named it for me. So essentially, what you got is it's equivalent of a price earnings ratio that you see in stocks. So with that, you've got like how much earnings is the company making, and then you do the ratio with its valuation. So it's like, is it doing a lot of earnings for the amount that the company's valued at? Then that's a low PE ratio, so it's probably undervalued. And so Bitcoin's not a company, right? It's a decentralized network. So all we've got is the network activity, and this one uses volume. This one uses the volume that's going through the network. When I say volume, I mean actual coin changing hands between two separate participants. And that means that a new investor just came in to buy those coins. So we're looking at the investment activity that's happening with underlying the network. And if you see very high investment activity, high volume, and it's coming in, a lot of people interested, there's a lot of coins changing hands, that's a sign of a very fervent, active network of investors buying into this asset. And so it should track to a higher valuation. And you can just lay up the volume on the network and chart that over time. And you can lay up the market cap of the network. And you'll notice the two are highly correlated. They sit on top of each other. And there's times when the network value, the market cap drops below the shape of the transaction volume. And those are the time where is when it's undervalued. So what MVT is, it just runs a ratio of the two, and you've got your price earnings. You've got these swings between undervaluation, like we have now, where there's high activity and a high investment volume, for a very cheap market valuation. So using that, you can kind of map that ratio to what price should be, which is what I call the MVT price. You map that price earnings and you look at where it should be on price. And the current price is just a shade below $55,000. So that's the organic valuation that investors are supporting right now, $55,000. We're currently, low 40s. So, well, we were over 20% undervalued not long ago. That's going to close. That's going to close. It's not under MVT price very long in a bull market. The last time we were below was at the wick down during COVID. The last time before that was the dead cat, bounce where it wicked down to $7,000 after the 20,000 in early 2017. Those were the only two times that we're below that value. So cheap coins right now, cheap coins.
Bitcoin is cheap. Listen, get in. What about the
Yeah.
SOPR? You mentioned SOPR, the SOPR.
Yeah. So SOPR. SOPR is what we call spent output profit ratio. Renato, who created that metric, said it for what it technically is. If I was to put layman terms on it, it's essentially the profit taking that's happening on the coins moving between investors. So it's the if I was to sit there and look at in a day all the volume of coin that moved hands, I'm going to calculate the sellers and calculate all of their profits. Some of them will be at negative profits, losses. I'm going to sum that all up and do essentially a ratio. And you're doing a ratio between when they bought and when they sold. And when it hits 1, obviously they're selling at break even. If it breaks below 1, they're selling at a loss. If it's above 1, of course they bought earlier enough that it is a profit at profit. So typically what you see in a bull market is the SOPR rises. It's always anyone who's selling out coins must have bought lower because the price is rising, okay? And so generally when we get pullbacks, the price is coming down lower and lower and lower and starting to meet the price that they bought at previously. And so essentially what you find is that as the price starts dropping, people are going to sell their coins and take money off the table and get profit. They'll take the profit while it's still on the table, But once it hits that 1.0 line and they're at break even, very few people in a bull market are willing to sell their coins at a loss. So typically, when you hit that 1.0 line, a full SOPR reset, that is when we get a bounce. And we hit that yesterday on the 1 week moving average. So the 1 week is actually a nice moving average on SOPR. That if you look at 2017, we hit it. We hit that on every bottom of the dip correction on that 2017 run up very, very nicely. We've hit that, we've dipped below it. So people are actually selling at a loss at that heightened amount. We're in recovery. So I don't think that's going to be sustained for very long. So yeah, we're in a SOPR dip buying season right now. I noticed some people use the daily SOPR, so not the 1 week moving average, and that's a little bit too fast reacting to be sure. Like, anyone buying SOPR on the 1 day, like the fast reacting one, could be entering a little bit too early. But we're on the 1 week, that's very reliable. So we'll hit that. We're good.
It's kind of a historic 48 hours that we've been through. Therefore, I think we'll be looking back at this and remembering it as a really distinct time in Bitcoin.
Yeah, what is it? The sixth steepest drawdown in Bitcoin history. Yeah, you know what? This will be one that people remember because that fourth year in a bull market, it's one that grabs. It's a crowd pleaser, right? It's one that grabs all the attention. That's when everyone piles in for the first time and become holders of Bitcoin. So this will be the one that people remember because we've never had one of these liquidity crunches in that fourth 1 year and 4. This time we did. You could say 2013 we had something like this, right? We had like a near 90% pullback. But that was like really early. Very few people were involved with that. There was no derivatives. They were all early libertarians, early tech, cypherpunky people, Silk Roady people. This is now getting pretty mainstream. What is it? 22% of the US was the survey that came out within America that hold Bitcoin. So mainstream public just got exposed to a liquidity crunch. So I think this will be remembered for a very long time.
All right, man. Well, listen, we should try and conclude this out with some positive signs. What are you looking at now, Willie? Well, like what's key on your mind? What are you keeping an eye on?
Yeah, it's really an eye on the recovery. It's really just the rate of the recovery I want to see. I'm really heartened by retail buying this dip. I think that's I actually frame this as really healthy. I know we're all very emotionally strung out right now because of this dip. Maybe a few traders got the other side and they're euphoric. But the long-term picture for Bitcoin is we have a shakeout. These shakeouts are very, 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 very healthy because the weak hands get shaken out. The strong holders buy. We get further distribution. So yeah, it's a good thing. It's a good thing, and then we've got cheap coins.
Hopefully, people will listen to this. They'll be less worried now because there are certainly people saying, "Oh, is it going to go to 20K?" Which I don't believe it will. So hopefully, we've reassured some people. I like the fact that you see this as positive. If this is seeing a distribution to retail, I'm happy. So
Yeah, it doesn't look like it, but in the long-term picture, it is very, very healthy and positive, and these shakeouts happen. And it's not the first time we've had a retrace like this. This is what, sixth one. So, yep, we'll leave it at that.
all right, Willie. Well, always good to talk to you. Yeah, business as usual. Back to stacking, hodling hard. Appreciate you, man. Take care, and I'm speak to you in a month.
Sounds good. Catch you.